I'm 3 years behind in my taxes. The SARS is looking for me. I'm behind my VAT. I can't get this tender because I'm not registered on some type of Companies Act database. Now, these are the common questions I get and the common comments I get when I first meet my clients. They only come to me when they're in trouble, when they're deep in the... And I ask myself, why couldn't they come to me 3 years earlier when they opened their company? You know, when they had that dream of wanting to open their own company, start that side hustle, leave corporate, they could have asked an advisor. But instead, they go onto a CPIC website and they register a company. Or they see a thing on the bus stop or an advertisement on some newsletter and they say, let me just register this company. And that's what they do. And 3 years later, after trading, they're sitting with either a high tax liability, they're sitting non-compliant because they can't get the tender, or they just don't know where they're at in their business. So when I open a company, or when I help a client open up their own company, I always advise them on 3 things. And the 3 main compliance issues that they have to look at before and to consider before they actually start the company. And I'm going to go through it step by step, and I'm going to go through why it's important. So I heard earlier someone speak about provisional tax. I'm not sure if it was yourself or, yeah, so it's provisional tax time now. And as an accountant, this is the most busiest season because this is when you're going to be non-compliant, because after the 28th, or extra day 29th of February today, you're going to be non-compliant with SARS if they don't get their 6 months provisional tax. Now, people don't understand what provisional tax is. Provisional tax is not a form of tax per se, it's more a process of collection that SARS has provided the business owner. Now, the provisional tax payment, without getting into too much of the detail, is basically just a 6-month provisional payment or an estimate payment based on the profits or taxable profits that you made in your business. Now, this is broken up either in August or in February, depending on your financial year end. Now, that's a form of tax payment that you make. But to start off, I'd rather start off with the CPIC requirements, the Companies Act requirements. The Companies Act requires every single company that's registered on their database to provide them with financial statements. And these financial statements has to be prepared 6 months after the company's year end. So within 6 months, you have to have a prepared financial statements. It can be done either by yourself if you're a small business, or preferably by someone who is able to sign off those financial statements. Now, why is the financial statements important? Maybe I should ask the crowd, why is the financial statements important? Why do you think the financial statements are important to have in your business, besides the compliance issues?
To track the movement of funds in your business.
Of course. Yeah, that's a good answer. If I ask Janti, what's another reason for financial statements?
So that users or investors, banks can get an understanding of the company.
Perfect. Also, that's the main reason why people use financial statements. Most people who run a business know what's going on in their business. They know who they owe, because either they get a debit order or they get a phone call if the debit order doesn't go off. They know who owes them because they know the work they did. So internally, you know more or less what's going on in your business. But mainly external providers or external parties who you need a loan from, or you need an investor to maybe boost that business, they don't know what's going on in your business. So the financial statements helps you that, which is beyond the compliance. So that's the first part. The second part is, once you have the financial statements, is to actually go onto CIPRO's website or the CIPC website, which we know today, and actually fill in that annual return. That's something you do every single year. So that's the second requirement. The third requirement is the tax return. So every single year you'll have a tax return that you have to provide to SARS, and with that, the basis of that tax return is going to be used your financial statements, because that's where you're going to get the revenue from, that's where you get the expenses from, and that's where you're going to get your assets and liabilities, which SARS wants. And that's going to help you fill in your tax return. And with those 3 things, you'll be tax compliant and you'll have a tax clearance certificate. So when people ask for a tax clearance certificate from me, I'm like, A tax clearance certificate is free. You just go on a website, it's a pin you put in, and it comes out. There's no charge to it. The actual charge is the financial statements and the tax return based on those financial statements. And to end off, I always ask the clients always tell me, how much is it going to cost? What's the cost of this thing? This is the other part of the speech. What's the cost of all of this? And the comments I normally get is, it's expensive. Yes, I understand. It's very expensive, there's compliance issues. And I always ask the client one thing, what are you trying to do? What's your purpose? Why are you here opening up a company? That's the first question I ask them. So if you're in a corporate space, and when I leave corporate, as I said, I want a side hustle, what does a company owner look like? What does entrepreneurship look like? That's my first question to them. Because if you're going to leave corporate for how can I say, if you want to own your time, you want to do less work, that's not what entrepreneurship is. You're going to work more harder. And number two, another thing of entrepreneurship is if you're unable to factor in the basics of compliance when it comes to legal and accounting and taxes, if that's something that you can't afford or you find is too expensive, then the business model and the business you have is never going to work, because a businessman finds ways to delegate and to get resources and people together that can help him and aid him in his plan to achieve something. So if you're going to build a business that you're going to be doing all the work, you're basically just building a self-employed job for yourself, which is going to defeat the purpose of you actually leaving a corporate job. So that's the basis of where I start from. And well, sometimes people don't open up a company through me, they go somewhere else, or they reconsider the pricing model of how they're going to price their goods, or they're just aware of the liabilities they will have in the future. So it makes them act consciously before they open their business, before they get that service or that contract, how they're going to take that contract forward. And I believe if everyone else thought the same way before they open up that business within one day, they maybe have some time of how they're going to continue keeping that business sustainable.